Something very interesting is going on in this chart. On first glance, it looks bad, but then there might be some reasons to be optimistic about this. So what we're looking at here is the bonus chart section for the weekly S&P 500 chart storm. If you want to receive this in your inbox each week for free, go ahead and subscribe in the comments, the description section. But let's have a look at this chart. Let's dig into this. So what we've got here is what I'm calling, just loosely calling at the moment, is the IPO boom and bust indicator. So after peaking in early 2021, the previously booming IPO and SPAC market has turned to bust. But that may not necessarily be a bad thing, as I mentioned there. So historically, the cycles of boom and bust in the IPO market have actually mapped fairly well to the cycles of bull and bear in the stock market. The chart here tracks the rolling quarterly number of IPOs standardized against the total number of listed companies. So number of IPOs, on a monthly basis, 3-month rolling sum as a percentage of all listed companies so that we can contextualize it. Like a lot of market timing indicators, it doesn't actually do a great job of picking the top as such, but it does appear to do a decent job of identifying market bottoms. Basically, when this indicator plunges towards 0%, that has historically been a sign that a bottom is close. It should be noted, however, that there are a few occasions where this signal was early, as well as instances where it went really low and then kept going lower. But what is the logic here? And this is a question that you really should always be asking when presented with really any indicator that purports to signal a certain thing. We've got a few points here that I would point out in this respect. So IPO activity plunges, right, goes to zero, right, when investor sentiment is very bearish. So there's no speculative appetite, no interest in IPOs by the investor base, like the demand side of things. Also, when cash and liquidity levels are tight, when confidence is low, when the sales and financial data looks weak, because after all, if you're going to IPO, you want your business to look its best, right? And the other thing there too is when valuations are very low, because another way of saying that valuations are low is that as a company selling your stock in an IPO, you're going to get a lower price or a lower total sum versus whether, if you did it at the height of the market when valuations are very high. In other words, if we look at what I've just said there, IPO activity tends to dry up at the bottom of the business, market, financial cycle. So in that respect, it is basically just a symptom of the cycle, or a symptom of what type of conditions you see at the bottom of a market. But also, and I think this is quite an important point that some might miss, is that at the margin, a smaller number of IPOs means that you've got less new supply of stocks. And so if we go back to Economics 101, or Econ 101, if we hold demand constant and then drop supply, then the logical thing that happens there is that price goes up. So there is some logic to it, both in terms of what it represents or what it is a symptom of, but also in terms of how it affects overall supply and demand and sort of net liquidity positions across the market. So the only question now then is how early the signal might be this time, and whether this is the low point in the indicator. So definitely one to keep an eye on. And look, if you like this chart, if you like this video, be sure to subscribe to the channel, but definitely come over and subscribe to the ChartStorm Substack, so chartstorm.substack.com. The link is in the description, so you can just click through there as well.